Stocks soaring today, in part enthusiasm. Now, this new trade deal with the United States and Mexico points to perhaps conclusion with all of these trade deals. Consequently, the S&P 500, NASDAQ, and Russell 2000 all closing at record highs. The Dow above 26,000 for the first time since February and getting closer. Here now to discuss, Catherine Rooney-Vera, Bulltech Capital Head of Research. Keith Fitzgerald's with us as well, Money Map Press Chief Strategist. Catherine, let me start with you. I think really last week was really, for me, remarkable when that durable goods number came out and the Atlanta Fed went to 4.6% very quietly on their GDP model. We know there's a long way to go, but how do you feel about this rally, the fact that we've got momentum back, that the breadth has gotten better, and that there could, some of the things that were potential headwinds could now become tailwinds?
Yeah, Charles, look, this is a rally that is based on fundamentals. I mean, the U.S. economy is growing extremely strongly, and it's not just based on one component. We're talking about total investment, spending, all growing, and I attribute it squarely to tax reform. I just think that tax law was just clutch in increasing both potential growth in the U.S., but also long-term sustainable growth. So I think that we're in it for the long haul. I am recommending our institutional clients, Charles, as well as retail, to, if there is a pullback, if it could be precipitated by perhaps the Democrats taking the House and impeachment being the next order of the day, to be going long this market.
So then that means right now they're long as well, or how much cash are you sitting in?
Look, I think that if you want to take some profits, certainly it's a great time because today was a record high in the history of markets, so it's a great time to take profits. But and sit on some cash, waiting for the next opportunity, which I think could happen, as I mentioned with that impeachment proceedings. If the market gets spooked, we will be recommending re-entry into the markets. You
know, Keith Fitz, I don't know. Between now and then, we could be up another few thousand points in the Dow. So
that's true.
I mean, we're seeing these breakouts, buying begets buying. These breakouts are the kind of breakouts rather than it looks like people are willing to chase.
Well, you know, we've got something else too, Charles, which you know all too well. A lot of people have been on vacation this summer, so volume's been thin, spreads have been so wide you could drive a truck through it. That's all going to settle down, and I think we've got a whopper of a run coming into the fall if the numbers remain good, because if the fundamentals are strong, that attracts capital, and there's a lot of it that still wants to go to work.
Keith, how important is that first week back after Labor Day when the big, deep-pocketed players come back? A lot of folks say this last week, you know, it's not necessarily indicative of where the market's going to go. It's thin volume, to your point, but that first week back may set the tone for the rest of the year. You buy that?
I do, but I think it's more like the first 2 weeks back.
Okay. Yeah. Catherine?
I'm so sorry. Yeah, I think guys will be coming into this market, and I think they'll be coming in strong. One thing to keep in mind, though, Charles, is that earnings growth has been sensational this year. It's up 25% on average year over year. Just think about base effects. So next quarter, we're going to be coming from a very high base. I do think economic growth is strong. Will earnings continue to grow at a 25% clip? Probably not.
So would that be the death knell then? Because I think anyone buying stocks today probably already knows that. I guess the assumption is as long as we grow, and plus valuations at these levels, because earnings have been so amazing in the first and second quarters, this market is cheaper now by most valuation metrics, Catherine, than it was in January.
That's very true, Charles. And I'll add one thing to your point, which is dead on. Multiples have come down. It's much more attractive to get into the market. You can look at sectors. Certain sectors are more attractive than others. I like industrials. I like financials. I'll add one thing. I like emerging markets. Emerging markets are not exactly cheap, but they're not expensive. They're trading cheap to developed markets, and on a historical basis, I do expect emerging markets to play catch up. So I like EM. I think you can do very well in the MSCI emerging markets at current levels.
Okay. All right, Keith Fitzgerald, I'll give you the last word. You have been super hot, my man. You have been picking and choosing the winners in earnings season. I'm telling you, you probably have the best track record this second quarter earnings for someone who's coming on and say, get this one, don't get that one. What do we like now?
You are very kind, Charles. Thank you for noticing that. I think the market splits. We've got 8 weeks until the next earnings cycle begins in earnest. To me, go with what works. It's a lot like a bull ride at the rodeo. You want 8 seconds to the buzzer. I think it's a company like Packaging Corporation of America, which makes all the cardboard that's being shipped everywhere by Amazon and Walmart. That's illogical. Or you go with something in the intermodal space, any of the transports. To me, goods have to move. If the economy's moving, that's the stuff that's going to go. Profits are in the book, contracts are solid, and revenues are growing. To me, it's the dirt in the fingernails right now that matters as we head into fall.